President Donald returned to bashing the Federal Reserve after a rocky day on Wall Street that saw the Dow Jones Industrial Average plunge more than 800 points, its worst drop in 8 months. Trump also said the market was in a correction, a term normally associated with a steep 10% drop in market value. The president told reporters on the airport tarmac en route to a rally in Erie, Pennsylvania following the stock drop, that the Federal Reserve has gone crazy. Trump has previously gone after the Fed's slow series of interest rate hikes, even as he has hailed the steady growth of the U. dailymail.co.uk iNewPicks 2018 10-10-23 513,363 B 600,578 6,262,627 Image a 3,1,539,209,548,775 JPG height equals 422 width equals 634 alt equals class equals book border img share copy link to paste in your message. No, I think the Fed is making a mistake. They're so tight. I think Fed has gone crazy, Trump said. HSS advertising read invented by Teeds, so you can say that. Well, that's a lot of safety actually. And it is a lot of safety, and it gives you a lot of margin. But I think the Fed has gone crazy. Trump also commented on the financial markets on a day when the S&P 500 dropped 3%. Actually, it's a correction that we've been waiting for a long time. But I really disagree with what the Fed is doing, okay, the president said. Share this article. Share 275 shares. Amidst the turmoil, the White House released a statement talking up the U.S. economy. The fundamentals and future of the U.S. economy remain incredibly strong, White House Press Secretary Sarah Sanders said in a statement. Unemployment is at a 50-year low, taxes for families and businesses have been cut, regulations and red tape have been slashed, paychecks are getting fatter, consumer and small business confidence are setting records, and farmers, ranchers, and manufacturers are empowered by better trade deals. President Trump's economic policies are the reasons for these historic successes, and they have created a solid base for continued growth, said Sanders, crediting her boss for the boom. Rising bond yields have been drawing investors out of the stock market, and the best-performing stocks over the past year took some of the biggest losses on Wednesday. Amazon lost 6.2% and Netflix gave back 8.4%. The Dow and the S&P 500, the benchmark for many index funds, both lost more than 3%, and the Nasdaq fell more than 4%. After a long stretch of relative calm, the stock market has suffered sharp losses over the last week as bond yields surged. dailymail.co.uk once 2018 10-10-21 4,936,038 0 image at 24 1,539,204,576,501 jpg height equals 467 width equals 634 alt equals class equals book border img share copy link to paste in your message. Share this article. Share 275 shares. The 10-year yield is currently 3.20%, the highest in 7 years, and up sharply from 2.82% in late August. Gina Martin-Adams, the chief equity strategist for Bloomberg Intelligence, said investors are concerned about the big increase in yields, which makes it more expensive to borrow money. Technology and internet-based companies are known for their high profit margins, and many have reported explosive growth in recent years, with corresponding gains in their stock prices. Adams said investors have concerns about their future profitability too, making technology stocks more volatile in the last few months. As stocks go up, tech goes up more than the stock market. As stocks go down, tech goes down more than the stock market, she said. She said in addition to rising interest rates, investors also fear that company profit margins will be squeezed by rising costs, including the price of oil. JPG height equals 423 width equals 634 alt equals class equals book border img share copy link to paste in your message paint and coatings maker PPG gave a weak third quarter forecast Monday, while earlier, Pepsi and Conagra's quarterly reports reflected increased expenses. Both companies highlighted rising costs, not only input costs, but increasing operating expenses and marketing expenses, she said. The biggest driver for the market over the last week has been interest rates, which began spurting higher following several encouraging reports on the economy. Higher rates can slow economic growth, erode corporate profits and make investors less willing to pay high prices for stocks. The 10-year Treasury yield rose to 3.22% from 3.20% late Tuesday after earlier touching 3.24%. It was at just 3.05% early last week. On Wednesday, the Dow fell 831 points, or 3.1% to 25,598. The Nasdaq fell 315 points, or 4.1%, to 7,422. The S&P 500 lost 94 points, or 3% to 2,785. Back in August, Trump said he was not thrilled with the Federal Reserve under Chairman Jerome Powell, whom he nominated, for raising interest rates, and said the U.S. central bank should do more to help him to boost the economy. Presidents have rarely criticized the Fed in recent decades because its independence has been seen as important for economic stability. dailymail.co.uk iNewPicks 2018 821-004 F3 F279 billion 500 million 578 6,080,179 Image at 12 1 trillion 534 billion 806 million 98,266 JPG height equals 413 width equals 634 alt equals class equals book border img share copy link to paste in your message. The president spooked investors in July when he criticized the U.S. central banks over tightening monetary policy. On Monday he said the Fed should be more accommodating on interest rates. Trump nominated Powell last year to replace former Fed Chair Janet Yellen,